Here's why nobody makes money trading Forex. And we know this because the numbers of successful traders is really, really sad, to be honest. And what we've learned in the past several years after training thousands of successful Forex traders, we realize that there's really 7 fatal mistakes that Forex traders make that cause them from becoming successful. So if you're struggling to be a consistently profitable Forex trader, then make sure you watch this video to the end because we're going to be covering 7 fatal mistakes that keep people from making money in Forex. Hi, my name is Adam Winnig, and we created this channel to help make your trading easy, lucrative, and fun. So if you're interested in more Forex trading strategies and tips and tricks, then go ahead, like, subscribe, and turn on the post notifications. So with that being said, let's get into the 7 fatal mistakes that cause people from making money in the Forex markets. The first mistake that people make is the fact that they're not trading an actual edge. Maybe you are not trading an actual edge. And what does that mean? All an edge means is it's simply stacking the odds in your favor just slightly. And the reality is that most people have some sort of trading system or trading strategy that they copied from some guru, or maybe they're getting signals or something like this. And the reality is that most people don't actually have an edge. Now, how do you know if you have an edge? The only way to actually know if you have an edge or not is to actually go through the markets and first back test it. So really easily you can do that on TradingView. If you don't have a TradingView account, you can get one for free. But basically you can come up here and you can click the replay bar. Then you can come here to wherever you want to start back testing. And then you can just start advancing the bars like this, just clicking. And you want to trade this strategy exactly like you would trade the strategy if it were a live forward testing environment, and no cheating on this because this will determine if you actually have an edge or not. Now, generally the rule of thumb is that you want to take at least 20 trades in a sample period in order to get some sort of statistical significance if your trading strategy is actually profitable or not. But you may want to go a little bit further, maybe do 100 or even more to get a better idea if you actually have an edge. Now, after you've done that, then you want to go ahead and live forward test this in a demo situation. So that way you're not risking any of your own money. And then ultimately after that, go and start trading your live funds. Now, the live market may be a little bit different because you're dealing with slippage and spreads and whatnot. So you want to start with a smaller account to start. So the first fatal mistake is that people are trading a system that doesn't actually have an edge. They may think it does, but they haven't actually tested it. And they've just took somebody's word for it. And that's the number 1 mistake. Number 2 is you system hop. Okay, so system hopping is simply the idea that you develop or you find or you create a trading strategy and you trade it for a little bit. Maybe you make some money, but ultimately all trading systems will go through some sort of losing period. And when you start losing money, you start wondering, hey, does this system actually work? Do I actually have an edge here? And after you've lost a little bit of money, you end up saying, hey, this system doesn't work. And you end up switching to an entirely new trading system or entirely new trading strategy. And this is what prevents a lot of people from becoming successful. Even people that are trading a proven edge, they didn't backtest the strategy, so they don't know how the edge actually performs during losing periods. And when they do start losing, they start getting emotional, and this causes them to switch their system, which it could just be like the very next couple trades or the next week that they trade, the system goes on this long winning streak, and this causes people from making money in the market because they're constantly system hopping. The third thing that we notice amongst Forex traders is that they try to catch tops and bottoms. And this can be a really fatal mistake because it ultimately makes you trade against the trend. Now, the reason why people try to catch tops and bottoms is mostly because of common indicators that are like the RSI or the stochastic that are really popular among retail traders. And the reality is everybody's looking at these same indicators. And while, yes, they can be helpful sometimes, this is not really good to just rely on this because it'll really cause you to try to catch the tops of these markets. Like if you see right here, the RSI was oversold. And what do you see? The trend just continues really, really quickly after a very short pullback. And you can see that the risk to reward is in favor had you have taken a long position. And if you just look at this, what are we in? We're clearly in an uptrend for quite some time on GJ here. And so when you're trying to catch tops or bottoms, you're automatically trading against the trend. And as you've probably heard from your Forex Basics training class, that the trend is your friend. And when you're trying to catch tops and bottoms, then you're automatically trading against the trend. Number 4, reason why people don't make money in the Forex market is that you're greedy, okay? And the reality is that there was a study done in prop firms, which if you're not familiar with prop firms, then they're just large capital firms that will fund you with trading capital if you can pass their test. But they found out that almost always after somebody receives a record payout, meaning their system's on a winning streak, they found out that almost always they end up losing the account like the very next payout because people get greedy. If your trading system is doing well or you're on a winning streak, then a lot of the times people get greedy. They'll increase their lot size or they'll risk a little bit higher percentage per trade because the system's been trading so well. But as you know, systems go through winning phases and losing phases. So if you've just gone on this long winning streak, then the chances are that you could start going on a losing streak. So if you increase your risk, then your drawdown comes even more during this losing period. And then when you start losing and they're like, crap, I should go back to my original risk settings. And then the system goes on a winning streak. And this is why, because people are ultimately greedy and they try to milk the system, especially after it's gone on a long winning streak. Oh, and by the way, if you don't have a system that actually has an edge, then go on over to bluedgeforex.com/VRT and you can download our free volume reaction trading strategy if you are looking for a real edge in the Forex markets. The number 5 reason why you don't make money in the market is because your risk to reward ratio sucks. And this is really, really common among new Forex traders. Traders are just looking for, a lot of the times, the highest win rate system because it appeases their psychology, right? It's easier to win a system or to trade a system that has a 75% win rate versus a system that only has, say, a 35% win rate. However, that doesn't always mean that you're going to be profitable. And you may have seen me talk about this. This was a study done. 43 million trades were studied, and they found with Euro US dollar, which is the most traded instrument, that on this brokerage, the retail traders had a 61% win rate, which means they're winning more than half the time, yet ultimately they were losers. And they went on to find out it was mostly because of their risk to reward ratio. Their losses were 70% bigger than their wins. Their average losing trade was 83 pips, while their average winning trade was only 48 pips. And so the key here is to have at least a 1-to-1 risk to reward ratio. The data showed that 53% of all accounts that operated at least a 1-to-1 risk to reward ratio turned a net profit in the 12-month sample period, as to those who operated under a 1-to-1 risk to reward ratio, only 17%. This means that if you simply use a 1-to-1 risk to reward ratio, according to this data, you should have a 3 times higher chance at actually becoming a profitable Forex trader. Number 6 reason, or fatal reason why people don't make money in the markets, is because you're trading too many pairs, okay? One of our trading coaches, his name's Yuya Kato, and this is something that I really learned from him. He's a 15-time funded professional prop trader. He's amazing. You can see more about him if you'd like to trade with him at fundedtraderfasttrack.com. But one of the things that I learned from him was that he only trades like 1 or 2 pairs. He really only trades gold and GJ. And the reason being is because he says that there's plenty of opportunities just within those 2 pairs. And most people will pull up like all the different pairs and they'll just sort through all the different pairs looking for this certain setup. And the reality is that all of these different pairs, they trade very differently. If you take a winning system on gold, for example, and you just take that over to a different pair, say you take that over to Euro US dollar, then the system may have a really, really poor edge and end up losing you money. And so the best thing is to trade just a very small amount of pairs that you get to know intimately, so that way you know kind of how they move and at what different times they move. And the 7th fatal mistake that is robbing you or costing you money or not allowing you to become a successful Forex trader, I also learned from Yuya, is to trade at the same time every single day. And this is really important because the market gets volume at certain times. Like, for example, you may want to trade like around the London Open, which is when the most volume is going to kick in, okay? Or you may want to trade, if you're trading gold, around the New York Open, which is when the most volume kicks in. But if you trade the same times every single day, then you're going to get an idea of how these pairs move at this certain time. So if you're just trading a couple pairs and you're only trading at one time during the day, then you're going to get a really good idea of how these pairs trade at that specific time. Because when the market is closed, then you don't really get a lot of volatility. There's not really a lot of action. And so if you're trying to trade your strategy when there's not a lot of action going on, then it may become very problematic. Hey, if this video was helpful, then please go ahead, like, subscribe, turn on the post notifications, and check out some of the other helpful videos that we've made on our channel right here.